Look at this. Kaspa. A project with revolutionary tech, mind-bending speeds, and a community fiercer than a dragon protecting its hoard. It's been dubbed the digital silver by some, the true heir to Bitcoin's fair launch ethos by others. So tell me, why isn't it on Binance, the biggest, most dominant crypto exchange on the planet? For months, years even, the crypto world has been buzzing. When Binance? But nothing, just silence. And behind that silence, my friends, lies a truth far more complex, far more calculated than you could ever imagine. A truth that affects your investments. Today, we're ripping back the curtain. This isn't just about a listing delay. This is about the dark underbelly of centralized exchanges, market manipulation, and the pure, unadulterated hunger for profit. Are you ready for it? Welcome back to the channel, my crypto warriors. If you're new here, hit that subscribe button and ring the notification bell, because what I'm about to reveal could fundamentally shift your perspective on how coins get listed, and more importantly, how you approach your crypto investments. We're talking about Caspa. This isn't just another meme coin. This is a Layer 1 blockchain, a true technological marvel, built on the revolutionary block DAG architecture. Imagine processing multiple blocks simultaneously, not one after another like traditional blockchains. That means insane transaction speeds, near-instant confirmations, and the potential to truly scale crypto adoption to a global level. It's fast, it's secure, and it's decentralized. It checks all the boxes, right? And yet, despite its growing community, despite its technical prowess, despite its rising market cap, the world's largest crypto exchange, Binance, has remained stubbornly silent. No official announcement, no concrete timeline, just whispers, rumors, and a whole lot of frustration from the Caspa community. Why? What is Binance waiting for? Is Caspa not good enough? Is there some hidden flaw? The answer, as I've meticulously uncovered, is far more cynical. It's not about Caspa's quality, it's about Binance's bottom line. And it all boils down to something you rarely hear about: free tokens. Let's dive deep into the abyss, because this is where the real game is played. You see, Caspa had a fair launch. What does that mean? It means there was no pre-mine, no tokens set aside for insiders, for venture capitalists, or, crucially, for the big shot exchanges. Just like Bitcoin, everyone had an equal opportunity to mine and acquire KS from day one. This is a beautiful thing for decentralization and true community ownership. But for a centralized exchange like Binance, it's a massive pain point. Think about it. A common practice, almost an unwritten rule in this industry, is that when a project launches, they often set aside a significant chunk of their token supply. We're talking millions, sometimes billions of tokens to give to Tier 1 exchanges like Binance. Why? For a quick guaranteed listing? The exchanges get these tokens for essentially free, they list the coin, they create liquidity, and then they dump. They sell those free tokens on the open market, rake in massive profits, and on top of that, they charge hefty listing fees. It's a win-win for the exchange. But with Caspa, there's no free supply. Binance would have to do what we do, go out and buy KS on the open market at the current price, which, has been hovering around that 7 to 8 cent mark. Then they'd have to hope the price goes up after their listing so they can profit. That's a much bigger risk for them. They lose their primary incentive. And that, my friends, is a fundamental roadblock. So, if they have to buy it, when would they buy it? Well, they're not going to buy it when the market is flat, or, even worse, dipping. Binance operates on maximizing profit, and that means timing. They want to list a project when the market is absolutely exploding, when retail traders, the FOMO crowd, are rushing in, throwing money at anything with a pulse. They want that altcoin season fire. Why? Because when the market heats up, trading volumes surge, prices skyrocket, and their profits from trading fees and their own positions just go through the roof. They don't want to list Caspa only for the price to stagnate or even drop in a bear or sideways market. That's bad for business. They want guaranteed bullish momentum to create a frenzy, ensure sustained upward price action, and maximize their returns. So, according to my analysis, they are patiently, shrewdly waiting for the perfect storm of market enthusiasm, when the tide lifts all altcoin boats, and when a Caspa listing could truly create an epic parabolic move. Timing for Binance is absolutely everything. Reason number 3, the secret conversations they haven't given up. Now here's where it gets really interesting and why there's still a glimmer of hope. Despite the public silence, my sources and strong anecdotal evidence suggest that Binance has been in close, continuous technical contact with the Caspa developers for almost 2 years. Yes, you heard that right. 2 years. In fact, over the last 6 weeks or so, the intensity of their questions, the depth of their due diligence, has significantly ramped up. This tells us one critical thing. Binance has not given up on Kaspa. They are performing serious technical vetting, they are doing their homework. This isn't a dead end, it's a prolonged negotiation, a deep dive into the underlying tech and security. And let's not forget the cryptic hints. Even the former CEO of Binance, CZ, and others within the Binance ecosystem have subtly hinted about Kaspa on social media. They're gauging community interest, aren't they? They're testing the waters. It's a game of cat and mouse, and Kaspa is definitely on their radar, even if they won't give us a timeline. To truly grasp this, let's compare Kaspa to some other prominent projects that did get immediate Tier 1 listings. Think Solana, think Sui. These are fantastic projects, no doubt. But their launches? Often they involve massive pre-mines and private sales. Huge portions of their token supply were allocated to venture capitalists, strategic partners, and guess who else? The exchanges themselves. These corporate-style launches mean exchanges get free tokens. They get a slice of the pie before you, the retail investor, even know what's happening. They can list, sell, and profit with minimal risk, all while collecting those sweet listing fees. It's a well-oiled machine. Kaspa, with its uncompromising fair launch model, fundamentally disrupts this machine. It doesn't play by their traditional rules. And that, my friends, is the true reason Kaspa hasn't seen that explosive major exchange listing yet. It's not a flaw in the technology, it's not a lack of community, it's the simple, brutal truth that Binance isn't getting its usual free tokens incentive. So what does all of this mean for Kaspa's price outlook? And yeah, more importantly, what should you be doing about it? My belief remains strong. Kaspa's lack of a pre-mine is its greatest strength in terms of decentralization and long-term integrity, but it's also, honestly, the biggest hurdle to a quick Binance listing. Until market sentiment undeniably improves, until we are truly undeniably in a full-blown altcoin season, Binance will likely continue to wait. They're looking for that perfect storm, that market frenzy where they can buy Kaspa on the open market, sell at significantly higher prices, and benefit from surging trading volumes. But don't mistake their patience for disinterest. Binance's ongoing, escalating technical contact with the Kaspa developers proves their interest is very real. When that altcoin season truly kicks in, when the market is roaring, that's when Binance might finally pull the trigger. And when they do, given Kaspa's fundamentals and passionate community, the price action could be explosive. This is why I encourage you to keep a very close eye on Kaspa's price action. Do your own research, consider accumulating KAS if it aligns with your investment strategy. Because while Binance waits for their perfect profit window, the opportunity for us to position ourselves before that potential listing could be immense. A quick but crucial disclaimer. I am not a financial advisor. The content in this video is for informational and entertainment purposes only, and should not be considered financial advice. Cryptocurrency investments are highly volatile and inherently risky. You could lose some or all of your invested capital. Always conduct your own thorough research, consult with a qualified financial professional, and never invest more than you can afford to lose. Past performance is not indicative of future results. Do your own due diligence before making any investment decisions. I hold positions in various cryptocurrencies, including those discussed in this video.